Welcome to Next Age Investors. My name is Silas, and this channel is where we build toward freedom, not just wealth. If you've ever felt stuck chasing paychecks or wondering how people actually build lasting wealth, this is for you. Today, we're starting from the beginning, from zero to financial freedom. Let's uncover how you can put your money to work and stop working only for your money. Wealth isn't built by luck. It's built by time times discipline. Compound interest is what turns ordinary savers into investors. When you invest, your money earns money, and then that money earns even more. Example, invest $200 a month in a broad index fund with about 10% annual returns for 30 years, and you'll have roughly $450,000. That's not magic, that's math. Here's what most people miss. When you invest in a broad market ETF like VTI or SCHB, you're not gambling on one company. You're making a single simple wager. Will the American economy keep moving forward? Will prices, wages, and production continue to rise over time? Because if America grows, if companies keep innovating and goods keep getting pricier, then you, as an investor, share in that growth. Every dollar you invest becomes skin in the game with the very companies shaping those prices. The opposite side of that bet, a total systemic collapse, a breakdown of markets, government, and industry, where no investment survives. And if that happens, none of us will be worrying about portfolio returns. So when people ask, isn't investing risky? The truth is, your only real risk is believing America stops progressing. Every crash brings panic. People sell at the bottom and watch the market recover without them. But history shows bear markets have always ended. Every recovery rewarded those who stayed in. Miss just 10 of the market's best days, and your lifetime return can be cut in half. Investing works because you stay invested. The only way to lose for sure is to stop playing. Everyone wants to be early. It's part of human nature. The idea that we can outsmart the system, predict the next big wave, and catch it before everyone else. But the truth is simpler, quieter, and much more powerful. Time in the market will always outperform timing the market. Imagine two investors, one who invests consistently every month, no matter what, and another who waits, convinced he'll know when the perfect moment arrives. Decades later, the patient investor's portfolio quietly towers above the market timers. The difference isn't luck or genius, it's discipline. From 1993 to 2023, missing just the 10 best market days would have cut your total returns by over 50%. Missing 20 of those days, you'd have earned less than half the growth of someone who simply stayed put. And here's the catch. Those best days almost always come right after the worst ones. When markets crash, fear spreads like wildfire. But history tells a consistent story. Every major downturn has eventually been followed by recovery and expansion. Every one. The Great Depression, the oil crisis, the dot-com collapse, the 2008 meltdown, even the pandemic crash of 2020, every single one rebounded. The people who stayed invested came out stronger. The market is a mirror of humanity itself, volatile in the moment, but relentlessly upward over time. It reflects innovation, progress, and the human tendency to adapt. So when you invest in a broad market ETF, you're not betting on one company. You're betting on humanity's collective ability to keep moving forward. Think of your investments like a tree. The day you plant it, it's fragile. But with each year, the roots deepen. Timing the weather won't make it grow faster. Only time and consistency will. Here's the part most people overlook. Investing isn't just about math, it's about mindset. Human psychology is wired for survival, not wealth. When we see red numbers on a screen, our brains interpret it as danger. We react instinctively, fight or flight. And in finance, that reaction often means selling when we should be holding. But wealth isn't built through reaction. It's built through reflection. The longer your money stays invested, the less emotion controls the outcome. That's why consistency always outperforms intensity. It's not about doing everything perfectly. It's about showing up continuously through every market cycle. Fear tells you you're losing. Wisdom reminds you you're learning. Every dip, every correction, every downturn, it's a test of belief, not skill. The markets are designed to transfer wealth from the impatient to the patient. And in that transfer, mindset is the real currency. We've been told to live below our means, but that phrase implies we have means higher than we use, and that's where many people get trapped. You're not living below your means. You're living on what you need. That's freedom. When you stop spending to fill emptiness and start investing to create options, life begins to open up. Every dollar saved is a future hour of freedom bought back from the system. Start small, track every purchase for 30 days. You'll quickly see where your money escapes. Most people think investing is risky, but what if the real risk is doing nothing? Every day your money sits idle, inflation quietly erodes its power. A dollar today buys less tomorrow, not because you spent it, but because you didn't make it grow. Let's take an example. If you saved $200 a month in a 1% savings account for 30 years, you'd end up with just over $104,000. Not bad, right? But if you invested that same $200 in a simple S&P 500 index fund averaging 8% returns, you'd have over $280,000 more. That's not just a number. It's the difference between working because you have to and working because you choose to. Every dollar you invest today is a future version of you that's freer. Every delay, a version that's not. The irony of money is that the safest choice often feels the scariest. But the truth, the scariest choice, doing nothing, is the one that guarantees you'll never change your life. Here's a simple blueprint. 1. Track everything. 2. Separate needs from wants. 3. Automate investing before spending. 4. Use low-fee broad ETFs like VTI or SCHB. 5. Stay consistent. The system rewards patience, not perfection. Financial freedom is not instant. It's built through small, consistent steps, compounded over time. Investing is about progress, not perfection. Even in uncertain times, remember, progress has been the constant story of humanity, and that's what you're investing in. From zero to financial freedom isn't about getting rich overnight. It's about joining the progress of an entire economy that's always moved forward. Your only real gamble is whether America, and by extension the world, keeps advancing. If it does, your money compounds with it. If it doesn't, then wealth won't matter much anyway. So bet on progress. Stay consistent. I'm Silas, and this is Next Stage Investors. Welcome to the next stage.